Welcome back to our intermediate financial accounting class. Over the last few segments, we've been talking about cash flows and cash flows and cash flows. It's been a long process, but we finally finished building a full statement of cash flows from the beginning step of finding a check figure all the way through gathering information, checking off special transactions, looking for non-cash accruals in net income, going back through the balance sheet to find all the working capital changes and non-cash accounts and things we may have missed earlier. And then, of course, putting it all together to get the worksheets to balance. And finally, building a statement of cash flows that works, that balances with that ending cash number, and then sliding in those non-cash insignificant transactions from investing and financing activities. It's been a crazy ride. We've got to do lots of cool stuff, bringing all of it together in a way that hopefully not only made a lot of sense from a cash flow standpoint, but also helped you to review and think about all the different concepts and methods we've talked about in intermediate accounting. The last thing we need to do is we have to add a supplementary disclosure. Because the example that we did was a direct method style statement of cash flows, we have to add a reconciliation in the footnotes from net income to cash flow from operations. The bad news is that because of this required reconciliation, most companies choose not to do a direct method statement of cash flows. So we learn it because it's on the CPA exam, and some few companies do choose to do it, and because FASB does prefer it, they think it's more informative. But the reality is we really need to practice the indirect style. And luckily, this reconciliation will walk us through that indirect style statement of cash flows. So with that, let's go ahead and pick up where we left off with our statement of cash flows, all built and looking beautiful, and balancing $2,251,000 with our ending cash balance. We've got our significant non-cash investing and financing activities, and this would be all that would appear in the formal statement of cash flows. What we're going to do next is going to be in the footnotes somewhere. We're going to call it a schedule, reconcile net income to cash provided from operations, or cash flows from operations. If this was the indirect style statement of cash flows, this would be our cash flow from operations section. So we'd call it operating activities. That's the only difference so far between what we're doing now and the indirect style. We'll start with net income. The easiest place to find net income and everything else we're going to need for this reconciliation is right here in our worksheet for our operating activities. So there's our $251,000. All right, next we're going to make some adjustments. And the rule is we're going to start with the non-cash items, and then we're going to put in the change in working capital amounts. So as we look at our list of changes over here, it's really easy to separate these out. Anything that says change is going to go last. Everything that doesn't say change is going to go first. And within the categories, it doesn't matter what order you use. So I'm going to start with these two. I'm just going to copy and paste to speed up this process. And if I use this paste values option, then it gets rid of all the formatting and everything that I really don't want in a formal statement of cash flows, although it really helps me in my worksheet. Let's see, there's my pension plan contributions. I've got the depreciation, amortization, and accretion. I've got the bond premium, the loss. Deferred taxes technically is a change, but by convention, we put it up with the non-working capital accounts. It's not considered working capital because it's not short-term. So short-term is kind of the qualification there. I'm going to make a note now. These are the change in working capital accounts. And let's see, to make this look a little nicer, I'm going to indent these. It makes it easier to see what we're doing. You don't have to do it that way. It just looks nice. So again, I'm just going to copy the changes just like I did the non-cash amounts. And you'll notice that it's much longer than that direct style because there's a lot more involved in changing net income into cash flows than there is just showing the actual cash flows. So this is my net adjustments. That's going to be the sum of all of these numbers. And if I've done it right, then when I calculate my cash flows from operating activities, it will match that 1,072 that we have in our statement of cash flows and we have over here in our worksheet. And there it is. Now, again, this schedule is required if it's indirect, but that's also exactly how it would look if we were to build our statement of cash flows using the indirect method. We do our non-cash adjustments first. Deferred taxes are considered non-cash because they're deferred taxes and no cash is going to be involved until later. And then we do the changes in our working capital accounts to show those other adjustments as well. Wow, we've talked about a lot of information. Everything comes together to build our statement of cash flows. So much cool stuff that all has to be understood and gathered and worked together to make the statement of cash flows work. You have to understand the other financial statements, journal entries, T accounts, worksheets, the way cash flows is different from accruals. It's awesome to see it all come together in this one last statement. And with that statement and that summary and that review of everything else we've been doing, we actually wrap up our intermediate financial accounting course. So just as a reminder, we ended our discussion talking about the last two financial statements, the statement of retained earnings, and then of course the statement of cash flow. The statement of retained earnings discussion was great because it let us get into changes in estimates and methods and correct errors, and we had to practice some of this key information. And then of course the statement of cash flows, like we just said, wrapped it all back up together. And with that, we have finished now talking about all of the financial statements, the balance sheet in Intermediate Accounting Part 1, the income statement in the first part of our Intermediate Part 2 course, and then the statement of retained earnings and statement of cash flows in this last module. And hopefully, as we pulled all of this together, you feel like you have accomplished a great deal, that you are comfortable with financial accounting, that you're comfortable with the financial statements and journal entries and basic accounting methods that form the foundation of all the other accounting that's out there. Everything else hinges on us having good, solid information that can be used by managers, that can be used by the tax accountants, that can be used by auditors as they do the checks. It all comes down to good, basic financial information. And then we use that information to start conveying specific things to specific people. And that's where accounting starts to break off. And our focus has been on providing these financial statements to our managers, our investors, and other stakeholders. As part of this process, I hope you also feel like you've accomplished our goals for the course. I hoped that when all was said and done, you would feel like you continued learning how to research and understand more advanced accounting transactions. And with our discussion of deferred taxes and leases and pensions, I hope you feel that way. I also hope that you feel like you understand more fully how accounting information affects decision making. After all, we've talked about all sorts of information about earnings per share, cash flows, how all of this information is important with every single set of topics we discussed. And finally, I hope you walk out of all of our intermediate accounting discussions feeling like you appreciate accounting more now than you did when you first started Chapter 1 way back semesters ago. Hopefully, you enjoy what you're doing. You may not love it like I do yet, but I hope you're starting to get there. And someday, I hope you'll write me back or email me or find me on Facebook or whatever and tell me how much you enjoy doing those journal entries that will be a part of what you do as an accountant. And with that, I wish you the very best of luck as you wrap up your accounting degree, your advanced accounting degree, your CPA, your CMA, or wherever else your career takes you. Thanks.